fellow traders everywhere. Adam Hewison here, president of INO.com and co-creator of MarketClub, with your video market update for Wednesday, the 3rd of April. Look, don't worry about the price of gas. The government has it controlled. If you read our piece about the energy agency, you'll be amazed at just how much money we pump into this every year, and they've done zero for everybody. So that's the Department of Energy. So write to your congressman and tell them just to close the agency down. They do no good for us. We'll also be talking about 3 stocks on the move: Toll Brothers, which is an important one, Merck, and ADT Corp. And is North Korea out of control? I was down in CNBC yesterday in Washington, D.C., met with a professor there who was telling me about the guy is out of control, not in the control of China nor the U.S., so that's a wild card we should be very, very concerned about. Also, Ron is gone. Ron Johnson, JCPenney. He'll be out in the next 6 months, in our opinion, because he's done a crappy job. And do we have a look over Ben Bernanke's shoulder to his 401k program? Yeah, right. I think things are changing, and I think we have to be cognizant of that fact. So let's go right to our portfolio. And we'll start with our S&P 500 cash. Whoops. And let's give that a little whirl. You can see how we have a little move down here in the daily. Maybe the first sign. Remember, we made new highs yesterday. But look, we've turned down in the all-important MACD, which is an important element. We're getting very close to the parabolic, which is right here at 1545, at about another 12 points lower. I'm a little concerned. It seems like this is becoming an old game. It's like we've never played. Plus, if we go down here, you can see we've got this divergence. We made new highs, yet we did not make new highs on the momentum indicator. See how that's going down like that? And we just went up like this. So that's a real concern. That's a real red flag in our opinion. Plus, you've got the MACD going down. Plus, you've got this very tight control here. Plus, we have our first indication, not the biggest indication. Please understand, the daily is not the most important one. This is the most important one, the weekly. If the weekly turns red, going down like this, you want to exit the market very pronto, because it's going to go lower. So let's clear the screen and go to our next market. And that's going to be markets really under flattening out here. We've been negative on the euro. We're still negative on the euro. You can see how it's just really going nowhere, and we expect that market to continue to just evaporate. Things in Europe are not good. They're not going to get better, and I just can see just a continued erosion in that market. Moving on to the Dow. This has been really this. Look at this trend. It's like bing, 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 bing. And here we are back here on the 22nd of January. Major buy signal of 1366. It's 14, almost 1,000 points higher in the Dow without any kind of correction. And it just seems like it's getting a little bit old. Look at the negative divergence here. We've seen this on the Williams percent R. You see we new highs here. Didn't follow through with the momentum. We're also on the MACD. We've got that below the red line, which is not a good sign. And it usually indicates that you're going to see some sort of correction coming in. So watch. The first thing I want to do here is really pay attention to the Dow, because that's being the leader, and that's the one the Fed is focusing on more than anything else, in my opinion. I'll tell you about that in just a moment. But look at this level right here. And that's 14,515. So just really another 70 points lower, 75 points lower. That's going to kick the parabolic into action on the downside. So watch that very carefully. That number, again, is 14,515. So let me just write that down just so you remember it. So it's 14,515. Okay, that's the parabolic number right here. If the market goes below there, that'll turn the parabolics negative for the first time since this time in February. So I'd really be watching that carefully. I'm becoming more of a doubter in this market. However, we have not had technical confirmation, and that's what we need to see, is technical confirmation. Moving along, this is gold. Wow, not good. Big move down yesterday, dramatic move down yesterday. and you can see it's even down today. If we close below the 1560 level, and we're currently trading at 1558 in the spot market, it's going to be a new leg down. I could see this market going to 1520 on the spot. You've got a situation here, you've got the parabolic. Let's just take a look at this for a moment, because I think it's very important to see where we're going here. If we put a close only chart on here, and let's just do that. Close only is right here. Click. Bingo, there it is. Below this level here, this is the lowest close we've seen, and that was at 1560. So let's go at 1560. If we close below 1560, currently 1560.70, right on that same spot, if it closes below there, it's not going to look good at all. All of our trade triangles are red, indicating lower prices, and we expect this market to continue to go down. Remember, we've never been bullish on this market because we kept saying that these trade triangles keep you on the right side of the market, and they've always been red. So let's just take a look at where we can go on this market. If we scope it out even further, I think a lot of people are incredibly disappointed in gold. Its performance this year was down 4% in the first quarter. This is where this 1560 level is really, really, really important. So I think that's a key level for this market to watch. 1560, if it goes below there, possibly can go down to the 1520, even the 1500 level. So let's watch that very, very carefully. So moving on to our next market. This is the NASDAQ, which has not performed well. Remember, we talked about the NASDAQ being long, the S&P short the NASDAQ. We still think that's been a good trade, and we still think there is a doji line yesterday, meaning there's a total standoff between the bulls and the bears, and then you have a negative down day today. You've already hit the parabolic, so I think this market's going to be particularly vulnerable on the downside. So please, please, please pay attention to this market. The NASDAQ does not look good. We expect it to go lower. So let's move on to crude oil. Big down day in the crude oil market today rather. And you can see if we put our daily in, bingo, we were out yesterday. You can see our dailies. Remember, we trade on the weekly and the daily in this market. You can see we've caught a nice move up, and we're out of this market right now. So this market could become a lot more defensive, but certainly I think getting down to the 894 level is going to be probably the first area where it's going to find some support, but big, big down day today. So let's move on to our next market, Tesla Motors. Now, I was on CNBC yesterday about Tesla, I indicated before Elon Musk mentioned this, that they're going to go to a leasing program. I think it's a very, very good program, and I think it's going to sell a lot more cars. The type of cars they're selling is not going to be affected by Mr. and Mrs. Average America. These are expensive cars to the likes of like Mercedes top end and Lexus top end and BMW top end. So that's the market they're competing for, and these are first-class vehicles. I would say probably, if we just draw this out very simply, this is the previous area of resistance, 40. So this was, and now this should become support, and that's the key. So this should be support, and resistance turns into support. So I would expect that we may see maybe a couple more days like this, and then I think eventually we'll see this market actually move higher. We could see this market going to the 50, 55 area. Elon Musk is the Steve Jobs of the automobile industry and the electric car industry. So let's watch the stock very, very carefully, but look for support to come in right around the 38 to 40 level in this market. So let's just clear the screen and go to our next market. And we're looking at Toll Brothers. Toll Brothers gave a major signal today. You can see right here. I picked this up on our trade triangles. That's why I wanted to put it into you today. Toll Brothers is a major home builder in the United States. And if we scope this out a little bit further, maybe a couple of years, you can see it's had a nice run. Let's take some of these things off here. And you can see, bingo, there's the first monthly signal we've had in Toll Brothers since this level right here. Let me just take this off. Since this level right here on the 30th of November, 2011. So it's unbelievable. This is a heck of a run. And we went from 2031 up to today, 32.97. Really nice run in this, but it looks like it's over. Potentially, we see a couple of things here that could be really troubling. And this is what we're watching on the bigger picture. is this top here and this top here. Now it's not perfect, but that is kind of like the double mountain top we look for sometimes. If we go below this level, I would say we could seriously see this market go down back to the 18 level to 20 level, which is not good, which is where we started from. So I think this is definitely not a good sign for the economy at all. This is a major home builder giving a major sell signal, the first since November of 2011. Really pay attention. This could be a real indicator of what's happening with the economy in the real world and not Fed world. So moving on to our next market. This is Merck. Merck gave a buy signal today, and at 45.42, it's 46.02 now. Looks like it's heading higher. I like the formation here. Just as we did not like Toll Brothers, we love this stock here. You can see what it's doing. It's formed a nice base right here, and we've gone over these highs here. And I would say let's scope this in just a little bit. Let's just clear the screen and go scope this in so we can see clearly the picture we're looking at on this market. And I think we'll just go to 3 months. Actually, 6 months are probably better. Yeah, 6 months, you can see this really nice base that this market has built. And the fact that we moved over here, there's the breakout, 45. So this is a breakout right here. And it looks like we're going to go higher. I would say from this level here, from 40 to 45, I'd say $5. We could be looking at Merck at $50 a share. That's target zone for 50 from where we are. It's about 10% move from where we are. So let's just clear that screen and let's just see how far, if we've been up there before. Let's go a couple of years. Yep, looks like we've hit it before, so we can hit it again. So this stock, Merck, MRK is a symbol right here, bullish. Moving on to ADT, this is a negative stock. Look at what's happened to this stock, and it's really not good at all. You've got this big sort of rounding top here. This has taken place for all of this year. It's going nowhere. We've taken out the lows right here, and I could see this market 46 to the high was 50. I would say we can get this market down to probably the 40 to 42 level, which takes us back to these levels right here. So generally speaking, this is not a good thing for ADT is the symbol, looking for this market to go lower. Lots going on. Watch the markets carefully. I think we could be in a transitionary phase, especially when we see how the markets close today. Watch the NASDAQ in particular, because that's the weakest coin we have, and also watch the S&P and the Dow. The Dow is what's been supporting everything and the move up. Watch that very carefully. I'm Adam Hewison for Market Club. I'll be back tomorrow, same time, same place. I hope you all have a great trading day.